Today's highlights. The US Congress is in turmoil, key data is all over the place, Chuck, Roger Ver wants to buy freedom with money, and the EU is eager to suppress the euro stablecoin to break free from the dollar's dominance. Ethereum has a critical price threshold, which is actually the life or death line for the entire crypto space. As for the current wave of US government shutdowns, it looks like we're already into Season 2, but there's still no sign of it ending. Key economic data releases have been completely halted, such as the 4-week average of initial jobless claims and the continuing claims numbers. All of these have been cut off. So both the crypto and stock markets are operating blindly, like they're groping in the dark. The Democrats actually tried to resolve the situation by proposing a bill to end the shutdown, but the Senate simply rejected it, and the deadlock became completely stuck. So you can see that when the stock market closes, everything sneezes along with it. Bitcoin was even slammed down to $120,000 at one point, but fortunately, some institutional whales mysteriously stepped in to prop it up and pulled it right back. So this shutdown isn't just about closing doors and going on strike, it's more like putting a blindfold on the Federal Reserve. All the inflation and employment data have gone out the window, so the government can only rely on stepping in, but even the crypto sector has been affected. ETF approvals are on hold, SEC cases in the US are suspended, and the entire legislative process has come to a halt. However, it seems like Congress is still holding back a big move. The U.S. Senate Banking Committee and Agriculture Committee are busy revising the Responsible Financial Innovation Act, planning to merge and review the draft by the end of the month. The House of Representatives actually passed the Financial Transparency Act back in July, but the former has already finished revisions, while the latter hasn't even started yet. Now, let's look at Bitcoin. It's currently fluctuating between $119,000 and $120,000, and for now, its foundation still seems solid. However, the volatility is going to get more and more intense. Overall, don't act impulsively in the short term and don't be pessimistic in the midterm either. Even if the government keeps arguing, this liquidity, like milk, will eventually flow back into the market. As for this round with Bitcoin, it's really been both exciting and nerve-wracking. Yesterday, it just crashed below 120,000, but this morning it bounced back and now it's holding steady around 121,900, up about 0.3%. But don't be fooled by this fake bottleneck. When it dropped below 120,000, the bulls had to throw in $975 million to push it past 123,000, while the bears were ready to put up $989 million. This is the legendary standoff. Whoever flinches first gets liquidated. If you look at the liquidation map, those bars aren't just for show. They're the market's seismographs. The taller the bar, the more likely it is that when the price hits that level, there'll be a major liquidity earthquake. Looking at the on-chain data, in the short term, it's the retail traders who are charging ahead right now. Veteran players are quietly exiting, which is a classic case of a shift in chip ownership. Bitcoin has now switched from an accumulation phase to a distribution phase. While this market action looks lively on the surface, there are still undercurrents beneath. To put it plainly, we're at a psychological standoff. Any surge might just be a fake high, and any drop might not be a real crash. Smart people aren't chasing the highs right now, they're all waiting for that needle. The moment it drops is the real signal to get in. As for this round, the prediction market has really blown through the roof. Polymarket just secured a $2 billion investment from the parent company of the New York Stock Exchange. Its valuation has soared to $9 billion, making it the chosen one. Even Vitalik, the founder of Ethereum, personally praised it, saying that this project has been the driving force behind prediction markets since 2015. On another note, the ETF funds related to Ethereum are experiencing a tale of two extremes. Overall, there was an outflow of $8.45 million, but BlackRock's ETHA bucked the trend by attracting $39.38 million. Fidelity, Bitwise, 21 shares, and Invesco all suffered significant outflows. Right now, Ethereum is stuck at the critical price point of $4,280. That's actually the average cost price for active addresses. If it can break through in one go, then short-term capital will immediately recover and increase their positions. But if it gets pushed down, a lot of people will probably rush to cash out. So $4,280 isn't just an ordinary resistance level for Ethereum, it's the watershed that will determine the fate of the entire market. Alright, please like and turn on the notification bell. We're here to help you sort through Web3 news closest to making money. We also hope you'll consider becoming a member to support us in making this channel more professional. All membership benefits are listed here, so please take a look. Now for today's headline, let's focus on a very important figure named Roger Ver, known as the Bitcoin Jesus, was one of the earliest investors in Bitcoin and made substantial profits. But back then, buying Bitcoin meant taking on a lot of responsibility. As you may know, at last year's Bitcoin conference, when Trump was still running for president of the United States, the crypto community's slogan was "Vote Trump, Free Ross." And after Trump took office, he certainly demonstrated his power in action. He directly pardoned Ross Ulbricht, the founder of the darknet marketplace. But after Ross was released from prison, he became a spokesperson and started speaking out on behalf of Roger Ver, the Bitcoin Jesus, hoping to help him obtain the status of special envoy as well. And what's even more dramatic is that, according to a New York Times expose, Roger Ver even paid $600,000 to the notorious lobbyist Roger Stone as a fee, almost writing, "Please ask Trump to go easy on me" in the transfer memo. So, do you think Trump will pardon him?
Early Bitcoin investor, Bitcoin Jesus Roger Ver, and the U.S. Department of Justice, they reached a preliminary settlement of $48 million to resolve the criminal tax fraud charges brought by the IRS in 2024. Roger Ver, now 46 years old, was accused of failing to accurately declare the value of his digital assets when he renounced his U.S. citizenship in 2014, allegedly committing tax evasion. According to U.S. media reports, if the court approves and Ver fulfills all payment terms, the charges will be dropped.
The whole time I've always said that I would gladly pay whatever the law requires me to pay in taxes. We literally filed a Freedom of Information Act request with the IRS asking, "What do you think I owe? Show us the calculations," and they still haven't been able to provide any of the calculations. And the fact of the matter is, not only was I the first person in the world to start investing in the Bitcoin ecosystem, I was also one of the very first people in the entire world to try and pay taxes on Bitcoin income.
Paying taxes to buy peace of mind isn't without precedent. BlockFi is a perfect example. The SEC went after them for years, and in the end, they paid $100 million to settle the matter. So how should Roger Ver's taxes be calculated? If it's based on the current $120,000 per Bitcoin, I believe that would be an astronomical figure. But if the calculation is based on the Bitcoin price at that time, just a few $1,000s per Bitcoin, the US government wouldn't be satisfied either. So the question now is, can you pay up to make the problem go away like BlockFi did? At the moment, no one dares to guarantee that. But judging from the current trends, it seems to have a bit of a short-term flavor. Let's turn our attention to the European Union. The EU has the world's first regulatory framework for crypto assets, called the MiCA Act. Although it's very strict, it is indeed the first of its kind globally. However, ever since the US passed the Genesis Act, the EU's legislation has started to look a bit outdated, and leadership still lies with the US dollar stablecoins. So, 9 European banks immediately announced that they would form a consortium to issue a euro stablecoin. However, the EU responded aggressively, saying they might actually ban the issuance of euro stablecoins. Why is EU policy always so conflicted?
Pierre Gramegna, managing director of the European Stability Mechanism, stated that the EU should actively promote euro-denominated stablecoins to reduce reliance on dollar stablecoins and to foster local financial innovation. Pascal Donahoe, president of the Eurogroup, further pointed out that although the digital euro has potential, euro stablecoins issued by the private sector are equally indispensable. Piero Cipollone, an official from the European Central Bank, stated that the digital euro could be launched no earlier than 2029.
Banks will mainly be the ones issuing stablecoins in Europe simply because they already have the ecosystem in place. It's easier for them to obtain licenses, and the whole compliance process around stablecoins is so complex and resource intensive that we believe it's really tailored to banks.
Once you understand this news, you'll realize that Europe isn't just following the trend, they're preparing to fight back. The global stablecoin market is dominated by the US dollar. USDT and USDC, the two giants, have taken over 99% of the market. Doesn't it bother Europe to just watch? They're constantly being overshadowed by the dollar, and even their digital sovereignty depends on others. The European Central Bank has long warned that if we don't control our own payment systems, we'll eventually have to hand over even our financial lifeline. So this time, the ECB is determined to make a big move, to create a euro-based stable payment system with instant settlement, operating 24/7 all year round. This allows employers to pay salaries and companies to make transfers with one click, and money arrives instantly. This isn't about playing with cryptocurrencies, it's about seizing power. Banks no longer want to pay protection fees to the US, they want to print their money, make their decisions, and control their rules. The bold ones, like Bitdeer, who once wielded shovels, now lead in self-rescue. Mining companies are collectively switching careers to become miners. In May, they warned about high risks, but by October, they'd bought ETFs. Even Luxembourg's sovereign fund seeks a win-win outcome for life. All right, let's take a look at the mining sector. After the 2024 halving, block rewards dropped from 6.25 to 3.125, which means miners' income was cut in half. On top of that, mining difficulty keeps hitting new highs every year, so when institutions got involved, mining profits disappeared almost instantly. Meanwhile, mining equipment manufacturers are starting to see their devices pile up unsold. According to Miner magazine, if you don't mine, you're missing out. Now, mining companies have simply started mining themselves to recoup their losses. Bosses from companies like Jiangnan Yunji and Bitdeer are making mining machines during the day and running them to mine coins at night. They've gone from selling shovels to picking up shovels themselves. So this generation of manufacturers has learned their lesson. They've basically started competing with miners for a living.
Nasdaq-listed company Bitdeer acted quickly. When customers delayed the delivery of pre-ordered equipment, the company decisively redirected the mining machines to its own mining sites, accelerating deployment in places like Bhutan, Norway, and the United States. According to industry data, Bitdeer mined 375 bitcoins in August, ranking 6th in the world. The company's self-developed series of mining machines combine high energy efficiency with stability, and they are expected to reach a proprietary computing power target of 41 exahashes per second by the end of October.
But when they scale it down to 3 nanometers, 2 nanometers, or whatever, like the joules, the performance gains are just going to decrease. It'll be just like that. The S19, S21 will become the new A4, the new A5, the new A6. There's a possibility they could just completely dominate the ASIC marketplace.
Right now, in Bitcoin mining, not only is the hash rate skyrocketing, but profits are also steadily declining. Miners' profits are as thin as paper. For example, a Bitcoin T21 or S2 machine pays 5 yuan a day in electricity costs, but only earns 2 yuan, or maybe 1 yuan and 90 cents, somewhere in that range. But is there a type of mining that can still achieve very considerable profits? Dogecoin mining, a single Dogecoin miner paying the same 5 yuan a day in electricity, can earn 10 yuan daily. In other words, if you exchange the Dogecoin you mine each day for Bitcoin, you'll still make about 5 times more profit than directly mining Bitcoin. So you can immediately scan the TG contact information on the screen to reach our customer service and see how you can get into this vast blue ocean of Dogecoin mining. Now, why do we call this a slow bull market? The national teams have started trading crypto, and that's exactly what we want to see. This is no joke. Abu Dhabi's sovereign wealth fund bought into BlackRock's spot Bitcoin ETF years ago, and now they're holding 4,700 Bitcoins. Norway's sovereign wealth fund is even more aggressive. In the past year, their profit from investing in Bitcoin was 192%. Even Wall Street would have to call them a master with that kind of return. The Czech National Bank not only bought Coinbase stock, but also added Bitcoin to its investment portfolio to test the waters. This is a central bank personally stepping in to experience the crypto wave. The most interesting part is that Luxembourg was still saying in its government report in May that crypto carries high risks, yet the word Bitcoin appeared in its own investment portfolio. Now, all the financial bigwigs at the European Central Bank are well aware. If they keep sitting on the sidelines with digital assets, they'll be left behind. So now, sovereign wealth funds have become new players in the crypto world. The national-level FOMO has officially begun.
It's all about how so many headwinds have turned into tailwinds for crypto, especially with equity investors now embracing digital assets in a big way. We've really started to see the inflows pouring in. Just looking at ETFs, the inflows into Bitcoin ETFs have now surpassed the amount that's come into the Nasdaq since their launch, which is pretty crazy when you think about it.
Bob Kiefer, the Minister of Finance and Secretary General of San Marino, recently confirmed that their National Sovereign Wealth Fund, FSRL, has allocated 1% of its assets to Bitcoin ETFs, which is about $9 million US. This move comes on the heels of a new policy passed in July 2025, allowing the fund to invest up to 15% of its money in alternative assets. This time, cryptocurrencies have finally been officially included on the compliance list. But Luxembourgers have always been cautious. They didn't buy coins directly, but entered the market through ETFs. This way, they can benefit from the market's gains while avoiding risks. It's a strategy that's both stable and profitable. A classic move.
The last bull market was driven by retail investors. Prices soared quickly, but the drop was just as steep, falling from 70,000 to 18,000. But now, who's running the show? Institutional investors and national sovereign wealth funds. The fundamentals have changed. If you still believe in the 4-year cycle, and if a bear market correction does happen, it's going to be extremely difficult for the price to drop by more than 50% again. Now, the average entry price for institutions and national sovereign wealth funds is all above 100,000. So no matter how much it corrects, the 100,000 mark should be able to hold. There's more than a 90% chance that the future will be a slow bull market. What do you think? All right, let's check out the news update.
Zhao Changpeng recently showed off his report card on X. His Jiggle Academy, which he founded, has been online for less than 20 days. It has already received $11 million in BNB donations. Netizens joked, "Is this the crypto version of Project Hope?" Solana is exploding again. The total value locked on-chain has soared to $42.4 billion, breaking records. Money is really pouring into Sol for DeFi staking, and all kinds of projects are donating. It feels like this chain is turning into the Lujiazui of the crypto world. Everyone wants to plant their flag here. Hershey is about to go mainstream. It's said that this largest crypto exchange in Hong Kong is making plans. They're preparing to bring crypto stories to the capital markets. If they really manage to go public, that'll truly be the crypto world entering the Hong Kong Stock Exchange. This time, the crypto market and the stock market are about to officially join hands. Grayscale is making new moves again. They've teamed up with Figment, and even Solana is getting ready to start institutional staking. This time, they're really putting Bitcoin to work, and even the old London brokerage GPSAP couldn't resist jumping into crypto. Their trading platform is about to launch stablecoin trading pairs. This isn't just the old guard joining hands with the crypto world. Looks like the financial sector has realized that if you don't add some stablecoin volume, you can't really claim to understand the market.
All right, let's get into some philosophy. How can you tell if someone is genuine or not? It really comes down to one thing. What do wise people value? Sincerity. What kind of tricks do petty people play? The virtuous walk alone, while the wicked always move in packs. Sincere people don't need to put on an act or play games. It's those who are most afraid of being seen through who do. Don't be fooled by someone's popularity. Having good social connections doesn't necessarily mean they have good character. True character is about staying upright even when no one is watching, not just being well-liked. Those who are slick and opportunistic go whichever way the wind blows. Remember, the faker a person is, the more friends they seem to have. The more genuine someone is, the smaller their circle becomes. So don't fear loneliness. What is loneliness? It's the purity that remains after filtering. And don't be too taken in by lively crowds that might be an illusion created by hypocrisy. Sincere people would rather be alone than mingle in fake circles. Smart people understand that it's better to be a king in solitude than a follower in the crowd. If you get what I mean, feel free to give a like. That's all for today's new episode. Every day we help you sort through all the news in the Web3 world. Here, we've organized our membership benefits. We hope you'll consider joining to support our daily updates. We also hope that in this bull market, we can lead all our friends to hustle together and gradually become wealthier.